Hey guys, welcome back to Father and Son Investing. Today was a monumental day for me. I got my first COVID-19 vaccine. That's right there, the first dose of Pfizer vaccine in my arm. So in honor of that, I thought I would talk about Pfizer today. You may be thinking, Pfizer, that's not a very hot stock right now. Well, let me give you some reasons why you should think about investing in this. Now, Pfizer has been around for a long time. They were started in 1849. They are one of four big U.S. pharma companies, including Johnson & Johnson, Bristol-Myers Squibb, and Merck. Now, Pfizer, you may be aware of because of their work in the COVID-19 vaccine. They, in conjunction with BioNTech, certainly put out the first FDA-approved COVID vaccine for the United States. It is a very good vaccine, and it is proving to be very effective at preventing death as well as symptoms. And even today, I was reading something about preventing people from even having asymptomatic disease. Now, Pfizer is much more than a COVID-19 vaccine producer. I want to just share with you some reasons why I think you should consider investing in this. Pfizer already has a number of drugs that they have in their inventory that they are actively selling, and they're quite effective. They have Vindamax, which has to do with cardiomyopathy treatment. They have their biosimilars. When you see that word, think along the lines of generic drugs. They have a number of drugs that are antibodies. Anytime you see a drug that ends in IB or AB, be thinking about antibody type treatments. They have a whole bunch of those. And then, of course, they have Eliquis, which is used for anticoagulating people who have AFib, like I have AFib. Besides the number of drugs that they already have in place, this is a company that is very successful at producing new drugs. They're spending about $8 billion a year in research and development, and that money does a lot of good things with their science. Now, Pfizer has a good track record of success. I talked about in a previous video phase 1 and phase 2 trials and how difficult it is even to get a drug to a phase 1 trial and then advancing those trials along. Pfizer is really good at getting these drugs pushed through to a successful end state. Now, if you look over here, they're getting 21%. That doesn't sound that great, does it? 1 in 5? But look at the industry average, 8%. And look at how Pfizer was doing through 2015, only 5%. So they have really ramped up their success rate. Pfizer has a number of drugs in a pipeline. They're working on rare diseases, they're working on inflammation and immunology, and they're still working on vaccines. They're working on a even better pneumococcal vaccine. They have diabetes treatment trials going on, and they also, of course, have drug trials going on to treat cardiovascular disease and high lipids. In addition to the drugs that they already market for treatment of cancer, they have at least 3 drugs that are in the works for future treatments of cancer. Their fourth quarter earnings were up $11.7 billion, which is an increase of 11%. Their adjusted expenses were down 2%. Their adjusted sales costs were up 31%. That was primarily driven by negative impact of unfavorable changes within their product mix, as well as COVID-19 related expenses and cash flow hedging on inventory. They did spend more on R&D in the fourth quarter. It was up 24%, and that was also primarily driven by higher spending to develop potential COVID-19 vaccines and therapeutics. They're not afraid of spending money to make money. I want to quickly talk about their stock price as another reason why you should consider investing in Pfizer. Now, they are significantly off their all-time high of right around $42 to $43 a share, going at $34.71 a share today. That puts their dividend yield right about 4.5%. Of course, that dividend yield goes up as the stock price comes down and vice versa. At this stock price, they're trading in the 10 to 11 times price to earnings. Now, traditionally, they have been running around $13 price to earnings, so they're down significantly from that. In fact, if they get up to $40 a share, that would put them right around the 13 price to earnings ratio again. That's about a 20% upside from where we're currently at. Let me go back to that dividend for just a minute. Now, Pfizer recently spun off Upjohn. The current dividend includes the amount that they would pay with that Upjohn as well. Once Upjohn has completely been divested away, which will be coming soon, that dividend will go down just a little bit to account for the earnings that would have come from Upjohn. Now, Pfizer was good enough to put out some 2021 financial guidance. There are a lot of companies who are not willing to do that right now. They're expecting between $51 billion and $61 billion in revenue. They're looking at an adjusted diluted earnings per share in the $3.10 to $3.20 range. If we take the midpoint of this expected revenue, that's about a 41% growth compared to the 2020 revenues. The midpoint of the diluted adjusted EPS reflects a 38% growth compared to 2020. Now you may be thinking, that's great, they're making a lot of money while they're putting out a COVID vaccine, but what about in the future when the vaccine might not be necessary? Well, Pfizer was good enough to show us what their revenue would look like without the COVID vaccine. By the way, they're assuming approximately $15 billion in revenue for 2021 from the COVID vaccine. So of course, if we wipe out that $15 billion, we're still looking at about $44 to $46 billion, and the adjusted earnings per share would be in the $2.50 to $2.60 range. This is still a 6% growth in revenue compared to 2020, and an 11% growth in diluted earnings per share compared to 2020. Now, I'll be delving more into Pfizer in the future and probably put out another video on this in a month or two. But for me, today was Pfizer Day. Happy Vaccine Day. I'm hopeful that all of you will soon be able to get your vaccine as well as we start to get life back to normal. Think about Pfizer. Think about some of the things I shared with you, especially about its stock price and that dividend. I love dividend-paying stocks. Until next time, enjoy your investing.